SoFi beat the earnings. The guidance was raised. Their forecast for 2024 was raised. And they've been doing good, and their growth over the last 3 to 4 years has been pretty massive. Yet, the stock slides. Why is that? Well, we're going to find out, and we're going to get to the bottom of it. Hey guys, Corey here. Welcome to the channel. If it's your first time stopping in, be sure to subscribe and tap the bell so you know when I post new videos. Also, you can sign up for the newsletter right there on the screen, as well as in the info box below. You're going to get tips and strategies right to your mailbox. And for the first 100 people to sign up from this video, you're going to get free trade alerts. High five, guys. We've been making money on Upstart, Hims, Rivian, SoFi, as well as Palantir and SoundHound. So let's get right to it, guys. Give me a thumbs up if you enjoy the video. We're going to start talking about SoFi, but before I do that, I want to let you guys know that if you're interested in getting better at trading, obtaining financial freedom, growing your wealth, and want to do much better and learn all you can in the stock market and trading, long-term investing, I am launching my full course in about 2 weeks, showcasing all of my knowledge over the last 7 years, everything I've learned, and you guys will have the opportunity, limited spaces available, you guys will have the opportunity to join in and take my course, Discord, and coaching. But there's going to be limited slots in the next 2 weeks when I launch it. So if you guys are interested, I'll teach you guys my system that got me from 13,000 to 7 figures in only 4 years. So let's get started, guys. We're going to talk about SoFi today. Let's dive right in and find out what is going on with this stock and what do I expect to happen with all this short squeeze nonsense going on. SoFi beat earnings and they raised guidance. SoFi has statistically relied on the loan and lending business. Student loans are their bread and butter. However, during the pandemic in 2020, the government issued moratoriums on student loans, which forced SoFi and other banks to reevaluate their loaning and lending business models, then turned to personal lending. From 2020 to 2023, SoFi's personal loan origins went from 3.6 billion to almost 14 billion. Loan volumes are down, and their year-over-year decline is 2%. Lending segment of their business to decline 5% further, down to 8%. 2024 is a conservative and transitional year for SoFi. Credit quality is also down as their net charge-off ratio is 3.4% on a $15 billion worth of personal loans, which is up 2.97% year over year. The loan book is also quite concerning. Still reported, though, second consecutive quarter profits, then raised the annual forecast by $25 million. Net GAAP guidance also raised $70 million. SoFi is focusing primarily on financial services and the tech sector of their fintech business, with a 20% and 75% growth respectively. We're focused on lending, and this is why 2024 is a transitional year. SoFi heavily invested in acquiring Galileo as well as Technisys. They provide back-end infrastructure which helps power fintechs and neobanks just like SoFi. Many fintechs don't have charters. However, SoFi acquired Golden Pacific in 2022, which allowed them to obtain a banking charter, so now they can take ACH payments, credit cards, checking, savings. Because of that, SoFi obtained a charter, which means they're now a one-stop shop banking service. Checking, savings, ACH payments, loans, everything. Banking charter allows SoFi to collect deposits from customers and have greater strength in the financial segment. Galileo allows SoFi to process ACH and credit payments, which leverages the SoFi platform. Technisys replaces the legacy banking systems, which are outdated by comparison. It supports multiple products simultaneously and runs on the cloud, which allows SoFi to process and analyze in real time. Their tech sector platform has bloomed into a solid business. Tech platform has grown 21%, and most fintechs do not have a charter either. The charter is also allowing SoFi to capitalize on net interest income volume and take advantage of interest rates. Quarter 1 24, SoFi's financial segment made $150 million, 86% increase from quarter 1 2023. With all of this said, SoFi is looking to become the AWS, the Amazon Web Service, of fintech banks, which if they achieve their goal and become more profitable, that would see SoFi stock likely in the $50 to $100 range in the next 3 to 5 years. Strong growth driven by higher interest rates, member growth, and deposits increased 16% year over year. SoFi has made an excellent pivot from the lending business to a one-stop shop financial business. SoFi also has greatly improved BaaS tech, which could provide massive growth. Banking as a service, BaaS, like I said a second ago, could grow 16% or more by the year 2030. However, the PE ratio is 96 and it currently trades at 1.96 times the tangible book value. SoFi has done a great job acquiring new customers, and their growth is more rapid than traditional banks and other fintechs, which warrants their high valuation. On Wall Street bets right now, the number 4 stock most talked about in the last few days is SoFi, right behind GameStop. The amount of shares shorted with GameStop is over 49%. However, SoFi's not too far behind at 35%. Everyone needs to start turning off their share lendings. This way, no one can get their shares to even short them to begin with. Because if you guys didn't know, big hedge funds in New York and all around the world, they're the ones that are borrowing your shares and allowing people to short them, and they're shorting them as well. If we all turned off lending, then they wouldn't be able to do that, or stock lending. SoFi has 2.4 million shares available to short at a 0.5% interest rate, whereas GameStop has a 22% interest rate in order to short the shares, which is insane. So considering all of the data that I've just went through on SoFi, they haven't seen any movement yet. And based on the data with GameStop versus SoFi, we could see a big movement. However, SoFi did run up a few days ago and slid right back down to the $7.10 mark. So it's hard to say if SoFi is going to get a squeeze, and it's what we really need with SoFi because there's a lot of people shorting this stock. A 35% is high. Anything over 15 or 20% is high. So there needs to be something done, and a short squeeze would be good because once they all get out, it would help maintain the price above $8 to $10. SoFi could probably realistically get to $10 to $12 with a good short squeeze, and it would stay mostly in that area. Look at GameStop. It's still over $30 or $35 last I checked. And this stock was at $9 or $10 only a week ago. So I don't know if I think SoFi is going to get a squeeze per se. It looks like it's brewing, and it's up 5,000% plus in most talked about stocks. That's a big increase over the last few days. So it's likely we're going to get some sort of squeeze on SoFi. However, we got to stop looking at just the short squeeze and overall look at the business model of SoFi. I'm going to put an image on the screen to show you guys the growth of SoFi over the last several years. They're growing very rapidly, but the amount of shorted shares and impatient traders and investors is really holding SoFi back, because after a few months or maybe even a year of holding, people are selling, plus the shares are being shorted, and nobody seems to want to just hold the shares and wait. SoFi is a long-term play. This is not going to be a put 10 grand in and cash $500,000 out in a month. This is kind of like those situations where you got to hold long-term. SoFi is like, in my opinion, a 2 to 5 year before you're going to start seeing good returns, like at least 2 to 3 years. So this is the chance to get in. It's right at $7. This is a good spot to get in. SoFi has shown resilience in the $6.50 to $7 range that it's just not going to break that. It's fallen to $6.80, $6.70 multiple times in the last 6 to 8 months, and it will not fall below that. So I think $7 really is the support for this stock, and that's where it's at right now. So I would buy and I would add. That's what I would do. And if it does fall to $6.50 or $6.25, if that was to happen, I would add more. This company is profitable and they're growing, and all their year over year and forecasts and guidance all keep going up. So this is not a stock to sleep on or to think that it's a heavy risk. I mean, all investing is risk. However, SoFi has proven time and time again, especially with their CEO, who's very intelligent and used to work on Wall Street. He knows how to balance the company and make it become profitable. He knows how to underpromise, overdeliver, which is exactly what's going on. Let's take a look at SoFi's chart, and then I want to show you how you you can get in selling some puts, let's go ahead and dive right in. I just want to point out that I'm not a financial advisor, and this is not financial advice. I'm just here to teach you strategies, give you tips, fundamentals, technicals, and different types of analysis on stocks as well as news. However, it's ultimately up to you to decide which stocks to put your money into and how much of a position in those stocks that you hold, because ultimately it's your money. So we are looking at Sofi right here. Now, this is a double peak. I'm going to go up to the 4-hour chart. You'll see this is a double peak right here. And what happens when a stock does this number right there and right here, it's not good. It came up, resisted down, consolidated, come up, resist, it's come down, tried to go up again, resist, come down. There's a lot of resistance on this line that it can't get past, and we are in a downtrend, you see? And what's going to happen is typically when you get in a downtrend like this, it either completely drops off or there's a breakout. Now, considering all the squeezes that are going on right now, and this stock basically has not dropped below 675 since May of 23. It's been a year since this stock's been below 675, and I don't think we have any gaps. I mean, we have a gap over here that got filled and got bought up. So really, the only gap we have is this little one at the $6 mark and this little one right here at the $5 mark. I don't think those are going to get filled. See, look at these gaps right here. We got a gap at 840, which further gives me belief that we're going to have a short squeeze because we have this gap right here. We've got a little gap right there. Not much. Actually, there's not really a gap there, but right here there is. And see, that's what's going to happen. I believe it's going to come down and it's going to break out this way and it's going to come up north of here. And because of this gap, it's going to shoot up and we're going to be back testing the $9 range. Okay. So that's what my guess is. And I really think that we've got really two options here. It's going to come down, bounce a little bit like this, try again, and then it's just going to drop. There's going to be a lot of selling, and it's going to be somewhere in the mid to high fives, possibly. I think the other scenario, which is the more likely, it's going to come down this week and early next week. It's going to bounce, and then it's going to break out, and we're going to see some heavy growth like this. So the other more likely scenario is that it is going to maybe resist here a little bit early to mid next week or the week after. So my second take on this is it's going to come down a little bit, resist, come back up. It's going to push right through like this and then just start to go. And we'll see like some type of move like this. And then it'll resist up here, come down. It'll go up for another peak and try again. And then it'll either come down and settle off somewhere down here like this. But if it breaks through the peak, then we very well could end up here. But I think this is the likely scenario. This is what's likely because of this right here and these two right here, especially if we go on the 4-hour chart, we can see this is a lot of resistance along this line, but we shall see. Everything about Sofi is pretty awesome. 1-year price target of 853. They need to make more revenue. They need to crush the next earnings is what they need to do. Okay, guys, so I've talked about this many times before, but if you really want to get into a stock, you sell puts to get in. Now, if I'm being honest, I'm not really even sure that I would sell puts at this point. Now, there is a lot of juicy premium. If we go out a week to sell a $7 put, we can collect $10, which is pretty good, especially on a $700 asset like this. We can collect ourselves like maybe even $10 juicy premium to get into this. But if the short squeeze happens while you're in the put, then you make $10, but then you miss out on the move. So right now, I would say that just buying the shares would be better because what we could do is you could buy the shares, hold, and if the short squeeze doesn't happen, then next week you could just sell covered calls. So we see that going out 1 week on an $8 call, make $3, $7.50 would make $7. What I would do is wait for Sofi to go up 5 to 10 cents and I would sell this for over $10. Or you could go out 2 weeks, wait for it to move a little bit, collect about $14, $15 per contract. Now, in my big brokerage, I have 1,000 shares of Sofi. So I'm running 10 covered calls at $8. So I made on 2 weeks, I made like a little over $60 the other day, just on those covered calls. If I get assigned at $8, my average cost is $6.80. So that puts me up at a $1,200 profit plus all the premium. But, you know, I'm not really worried about it because I also have 500 shares that I'm not selling calls on. So those are my runners. So that's like the smart strategy. I'm going to let those run. And I think that Palantir is also going to get a little bit of a squeeze. Right now, they are struggling to break the $22 barrier. And if it breaks, Palantir is going to jump. It's probably going to go back $23, $24 quite easily if it breaks 22. Sofi, on the other hand, I don't know if I would sell puts to get in now because because of the short squeeze. But if you must, I would go out to June 7th or maybe the 31st, 21. Yeah, what I would do is I would go out to the 7th. And the reason I say that is if you're trying to just make money on the puts and not actually get assigned, you most likely won't get assigned on $7 going 3 weeks out. The price is most likely going to be like in the mid to high sevens in 3 weeks. So if you're just looking to make cash and juicy premium and don't want the stock, I'd go 2 to 3 weeks out, collect $20 to $30 juicy premium selling a put, $7 put. You can wait for the price to maybe in the morning come down a few pennies. You might get $22, $23 for this. Just collect that $20 to $23. 3 weeks from now, you're making $20 or more on every contract. If you have the capital, let's say you have $3,000 or so, you could sell 4 contracts, you make $84. And if you get assigned, then your break-even price is really $6.80. That's really good. If the stock falls to say $6.90 and you get assigned, you're in the green by like $20 on every contract. So you could just sell the shares and make a killing. Like you make all kinds of profit. That's like a put seller's dream. You sell a $7 put, you get assigned, but the stock's at $6.99. It only goes under by a penny. You get assigned. You're still all that premium that you collected ahead. So in this situation at $20, we'd be $19 on every 100 shares in the positive, even after the assignment. That's what I always love about selling puts. I love getting assigned when the stock price barely breaks under the strike price. Sofi is a great stock. The problem is a lot of investors are impatient and Sofi is a long-term investment. This is not a stock that you're going to buy and in 6 months to a year, you're doubling or tripling your money. Now, it is possible, but the way I look at Sofi is they're basically a long-term investment, 3 to 5 years. They're the equivalent of like Bank of America. You're not going to buy Bank of America, although they have went up $5 a share in the last month. You're not going to see Bank of America just blitz its way to $80 this year. Now, Bank of America will probably be $80 in 2 to 3 years if they keep up their year-over-year rapid growth that they're having right now. Wells Fargo was able to go from $40 to $60 in the last year. So SoFi could realistically see a 50% growth. I don't think it's out of the realm of possibility to see SoFi around $10 to $12 in the next 6 months to a year, more or less likely after September, pushing into the third and fourth quarter if they're good. We have a solid second quarter earnings, and then the third quarter is just as good, if not better, and it shows more growth. And then the fourth, we absolutely kill it at the beginning of next year. SoFi realistically could be at $10 to $12, but this is a long play. All the things I discussed in this video are positive, mostly positive. So it's just a matter of allowing this company to play out, you know, their guidance and their expectations and allowing them to do their thing, allowing the CEO to do what he does best because he's a very smart CEO and he understands growth and working on Wall Street. I think he even worked at Goldman Sachs. So he understands this business. SoFi, in my opinion, is not only a good stock, you should be adding to your position and dollar cost averaging, selling puts to get in, selling lots of covered calls. And not only that, if you're looking to get in now, I would not be selling puts or covered calls right now. I'd buy the shares and hold them at least for a week or two and wait for the meme rally to finish, because you could find yourself in a position where you buy some shares and end up making a 20-30% profit in the next week or two due to all of this rally that we got going on. So at the end of the day, even the meme rally and all these things aside, SoFi is an awesome stock that you can put some money into and add to your position little by little over time and not really have to worry because they've got a pretty good support. Like I said, all investing comes with inherent risk, but SoFi's got a good business model and they're working in the right direction. Growth is good and they've got a charter. A lot of things fintechs don't have. So the only thing we can really do is just have patience and watch our wealth grow together with SoFi. Thanks so much for being here, guys. Be sure to subscribe and tap the bell so you know when I post new videos, and give me a thumbs up as it greatly helps the channel grow. Don't forget, sign up for the newsletter right there on the screen, as well as right below in the information box. The link will be there. First 100 people to sign up get free trade alerts. We've been making money. High Five, Upstart, Hims, Rivian, Soundhound, Palantir. We've been making all kinds of juicy premium. You guys can see the comments on the screen. You need to sign up for that newsletter so you can make juicy premium and profit with us. And don't forget, guys, in 2 weeks, if you want to learn everything I know and learn what I did to get from 13,000 to over 7 figures in just over 4 years, I'm launching my full coaching, Discord, and training course in about 2 weeks. You guys are going to want to be a part of that, especially if you want to learn all the tricks and all the strategies that I've been using over the years to compound and grow safely and consistently. Let me know if you're interested by emailing me, Corey@investwithcorey Corey.com or in the comments below. And don't worry, guys, this video's over, but I got another one for you. Are you ready? Right here. This video is going to show you how I went from 13,000 to 7 figures in 4 years. So you guys want to check that out and learn my story after divorce and how trading changed my life and how I achieved financial freedom, because I want to share it with you guys.